So I guess we have two types of customers now. First type is those that are ipit, yung maraming binili, and then they have experienced this massive correction and now are thinking about what to do, and they're asking our channels as well. So
I think what you have to do is look at the conditions of the customer, like you say.
Right.
I mean, is the orientation short term or long term?
Right.
If their situation is short term and they don't have time to be able to bear with the entire brunt of this corrective element, then I think it's wise for them to be able to try to lighten up and raise some cash. Also, because it gives you the opportunity that once the market falls down more, that you will have the ability to take advantage of the values that April was talking about, right? Also, it gives you some breathing space, because if you need that money for something else and you need it into the short term, at least you have something that you can tap into. Now, I don't think I'd be in the camp where I want to liquidate everything, because if the values are already starting to show some degree of attractiveness at this point, and who knows? I mean, even if I think inflation were to be able to temper even a little bit, you probably see the market recover on the upside right away. So I think if you want, you just raise enough cash so you can feel comfortable with your portfolio, that you can tap into it in case you need it. And if the opportunity comes into the short term that you see, just in case you see one more scare into this market, and you're ready, and that you can deploy into your favorite issues and take advantage of the cheapness in price.
So you mentioned a while ago, Sir Juan, is raise cash in appropriate time. So how do you exactly do this? So we see a correction, short rally, then we sell probably.
So you see a rally, it's usually the best time to do it. You probably don't want to be selling it when there's an emotional sell-off taking place.
Okay.
Right? So wait for the rally, so at least it manages to be able to contain too much of the loss that you're taking at the time. And when you're selling, there's more volume out in a rally, so it's easier for you to get a better price. Not, when you're chasing it on the way down, you're probably selling in quite a number of fluctuations down. So it's probably not appropriate to be able to always act when there's too high emotion into the market. Now, if you're on the longer term, right, and you have the ability to wait this through, I mean, I'm the camp, and I've seen it many times before. These sell-offs only have a limited life. After they go through this, they'll turn around and they head back up, and one day you'll rue the day that you probably sold it at the particular this price, because you'd see prices move up. Right? So, depending really on the timing element, I think that's how we make a decision.
So, any advice to?
Yeah, I guess I agree with Juanes. The question is, are you a long-term or short-term investor? Definitely on the short term, I wish I knew where we would bottom, but I don't. And I guess, as I've said in my previous articles, Warren Buffett has said it perfectly, says make sure that when you buy something, you are able to sit on it for the next 10 years. And this doesn't only apply to what stocks you're going to pick, but also for, the size of your asset allocation. So maybe in the past, you could be a little bit more aggressive and buy a little bit more. But right now, I guess we should be honest with ourselves and ask ourselves, is this something that I can afford to sit on? And if you can't, then maybe you should sell a little bit and just right size it. And again, I mean, those are for the IPET clients.
Right.
But then, if you are confident that this is something that you can sit on, I'm quite confident that we'll see better prices in the longer term. So definitely, you shouldn't be worried.
Any soft guidance, ma'am, on the right size? Kasi how do you determine for yourself what the correct size is for a position?
Yeah, I guess you can ask yourself, is there something that you need to, pay for next year?
Okay. Right.
Or, immediate needs, those would be some practical perspectives. Kasi it's difficult to say, if I tell you, compute your net worth, and maybe it's 10%, 20%, I guess you just have to be honest about yourself. Do you need the money from this portfolio to support your day-to-day activities, or are you expecting to make a big purchase next year? Are your kids going to college next year, and they're going to go abroad or something like that? So maybe it would be wise to just set aside that money first and not invest it.
For the customers who are able to raise cash during the peaks that we've seen this year and are now looking to enter the market in a strong way, so what are we looking for?
You know, one of the tough things to really do is to ride a downtrend through, and even if you don't have a position, because you know, as markets are falling down and every time you see a spike down, the tendency for you is to get excited. Could this be it? Could this be the next opportunity? You know, and I have a little cartoon here I'd like to be able to just show you. I want to show you, I took out the name of the stock, so you probably would just guess which one it is. But on the way down, and many people would have asked me on the way down, said, is this the low? Is it time to enter? And then after that, it fell again. And then when it fell to the next level, they asked the same question, is this low? Is it time to get in? And then it fell again right after that. And then it did that a number of times along the way on the way down. And so asking whether it's a good time to bottom fish, right, is a constant guessing game for you. Now, if you're a trader, you really entomb what this particular dictum forces you to do, is you wait this downtrend out, right? And if you want to be able to do bottom fishing, and let's say you are kind of a half technician and half fundamentalist, when that number starts to speak to you and you say, you know, I don't see these values anymore, and it's very rare, like she said, it's an opportunity and it's a very rare event that comes in, then what you do is you gradually enter this market. Never mind of being aggressive. There's no point in being aggressive in a downtrend. The market will not run away from you. Right, so allow the market to fall down and you gradually buy that market little by little. Now, as I would see a reversal pattern or a slow basing pattern take place from that, that's when I can start positioning a little bit heavier during those times. But until that time, I think you want to be very, very more gradual in your approach into the market. In fact, you know, people says, why do you want to buy the ultimate low? Because it's so exciting for them to buy that. Imagine if you are able to buy the lowest point of the market and it recovers from you. I think that's the best feeling there is in the world. But it's very rare in reality that people actually get to do that. And by the time they get to do that, they probably done it once, twice, and 3 times and failed in the first 3 attempts and only to succeed in attempt number 4. And by the time it recovers, you're still spending for the losses or making back the losses that you hurt in the other one. So the idea is, you know, I've a saying here that my father told me once before when I was learning how to trade, and he said, and he told me that, you know, the early bird catches the worm. But he used to say to me, but was it wise for the worm to be early? Right? Because one way or another, somebody's going to get hit on the raw side over here, and better make sure it's not you. So the whole idea is the best way to catch what we call a falling knife is to allow the knife to fall down to the floor first, and when it's finally not falling anymore, you can just pick it up and take it to where you want. And that's the safest way to trade.
All right.
No. I would have the same advice as Juan, is to buy it slowly, because of course this is a buyer's market, so there's no point in rushing in, and at least when you do it slowly, you have this opportunity to average down your price, you know. So at least when the markets recover, you can recover faster as well.
Well, I would expect that in the short term we may still see some vulnerability into the market, so do expect some choppiness to stay for a while. But I do hope that we can have a little bit of a Christmas rally after this sell-off. So I'd be in a cap to prepare my Christmas basket, because like April said, this downsizes of such magnitude come only once in a while. And hopefully that we can see the valuations stay here a little longer, so we can average out whatever positions we can buy, and just be on the lookout for the technical conditions that I've mentioned. As we see reversals come up and more solid bases are made, it should be able to present people a much more opportune moment to buy back this market at really good prices.
The markets are really cheap, cheap enough to buy, in our opinion, and just don't forget that. I mean, you know, markets become cheap only when there are problems. But then again, for us to be able to participate, you know, we just need to manage our risk and be realistic in our expectations. But, you know, eventually I'm quite confident if you hold on to your position long enough, you will make a profitable investment, and now is a great opportunity to come in the market.
Mm.